Today I'm going to go over why the little guys actually have an advantage in investing and then sort of branch off from there. I'm going to cover a few topics in relation to it and actually something that isn't quite often talked about. So the first thing with this is that when you're a private investor, the first thing is you have access to thousands and thousands of companies. Think about Berkshire Hathaway, think about, large investment funds. Their size, their minimum position for it to even make a dent in their portfolio would often have to be in the billions, meaning that the smallest company they could invest in would have to have a market cap of a few billion, right? Keep that in mind, because as a private investor, there's so many businesses which are in the market caps of 50 to 500 million, where it's quite frankly underpicked, and there's a lot more opportunity there because there's a lot less eyes there. And what will happen is, generally, if you've got a smaller capital fund, generally you'll start to compound that money, and as you compound, you'll generally move up into the big leagues. So as a result, the people who are at the top are can be generally quite good investors who have worked their way up. But another factor to take into account is the statistic, which is of the top 500. So the top 500 companies in America, in part of the S&P 500. Guess how many people downloaded the SEC filings, meaning the 10K, the quarterly report, the Qs and the Ks, or the 20F if it's a foreign company. Guess how many people and certificates were downloaded, or PDFs rather, were downloaded after the first day of earnings and on the day of earnings. Guess. I bet you won't believe it. It's 28. That is the average number of PDFs downloaded, essentially copies downloaded, meaning that these companies, which on average have, hundreds of analysts, hundreds of different funds, businesses investing in these companies, and there's hundreds of thousands of investors just looking at the companies and so forth. And you mean to tell me that only 28 are downloaded on the day of earnings and the day after? That is ridiculous. And on top of that, there was another study which sort of complemented this and was quite complementary to this. And it was actually, they surveyed various different types of analysts, such as security analysts and so forth. And they essentially asked them, do you read the annual reports, yes or no? Or do you read the quarterly reports and the filings? And 1/3 of them admitted to saying that they don't read these reports. If 1/3 admitted they don't read these reports, that means probably a heck of a lot more don't actually read these reports because they didn't want to lose their job, meaning that probably 2/3 of these analysts could easily not be reading the annual report, which is just ridiculous. I mean, if you're a private investor and you take the time, you can go through these documents as well. They're incentivized to be quick. They've got a job to do. They've got lots of different companies to track. They've got lots of different activities to do. So you may think that big companies sort of have an edge, but really, if you're small, nimble, and you can focus on specific areas, that can be your advantage. You can look in areas which are sort of underlooked as well. That's another advantage. So you could almost argue that it's rigged in your favor as to other people's favor. And a lot of the time you can have a more boots on the ground approach as well, where you're more intact with what's going on. You're not the traditional, and nothing, no offense to if you are, but not the traditional 6-year-old white male who's in the investing space, where everyone else who also is investing is a 6-year-old white male. So they may know certain brands for the age category in their group, but then the other brands are, all unknown essentially to them, or very little sort of competence in that region. So that there's various different sort of edges that you can take. I mean, just reading the annual reports, just looking at the unpicked smaller companies can often give you a huge edge. Thanks for listening.